Bitcoin is pushing up, about to touch 70,000, leading many to wonder what will be the catalyst to finally break the recent all-time high. While that's happening, we have Roaring Kitty back with hundreds of millions of dollars worth of GameStop calls, liquidating about $1 billion over the weekend in GameStop shorts. If only there was a market that was open 24/7, 365, where those shorts could have closed on the weekend instead of waiting till Monday to have their faces ripped off. We're going to talk about this, the macro, and more. It's Macro Monday with Dave Weisberger, McGlone, James Lavish. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel, hit that like button. I apologize to you guys. I missed a lot of shows at the tail end of last week because I was very busy with Dave Weisberger in Austin, Texas for Consensus. We even had to cancel 2 spaces because I was there with Mario and Rand was off somewhere at MemeCon or something in Lisbon. He forewent a trip to Austin, Texas for Consensus to go to MemeCon, if that tells you anything about what's happening in this market right now. Going ahead and bring on all the boys right now. We got Dave, Mike, and James. Dave rocking the McLaren orange at the casino in Vegas. He's out there doing the meme coin thing in real life, aka playing poker and trying to get himself into the World Series, right?
Well, actually, I cashed in my first World Series event, the Mystery Millions, and I open up day 2 in about 5 hours with 900,000 in chips. So we'll see. It's a brutal tournament, though. Today, everyone who gets knocked out, you get paid a bounty, and the bounties there's some weird way they do it with an envelope, and you could randomly knock out a short stack and win $1 million. So it will be a brutal tournament. We'll see how long I last.
Well, my money's on you, and my money's on McLaren. Mike, we got Monday morning as usual. Anything huge in the morning meeting that we should know about? Anything changing here? And then after that, James, I want to talk about the recession red flag from your newsletter.
Yeah. But listening to my colleagues makes me keep my bullish bias on gold, which did end the month of May at another record monthly close. But Fermanagh Wong expects 4% unemployment continue to tick up. There's increasing fear of losing jobs 12 months ahead, finding a job, and things. She still expects employment to continue. Gina Martin Adams, our equity strategist, pointed out the sentiment towards China is continuing to deteriorate, expects that, but expects stocks to be more subject to macro data in the second half. Ira Jersey made a key point is the auctions last week were some of the worst in his career. Every one of them tailed. That keeps me bullish gold because what's the alternative to the dollar and treasuries is gold. ECB is going to be cutting. Bank of Canada is going to be cutting. Again, all that stuff's quite bullish for gold. Everything else for me, dipping into my space, is just bearish for commodities. I've been digging in lately, updating my Wealth of Nations, Adam Smith, kind of just revisiting the cycles and things he taught. And everything I see in commodities are just very bearish, deflationary cycles. Crude oil looks like it's peaked. Hedge funds got way too long at the high like they did last year. Copper looks like it's peaked. Again, hedge funds are still way too long in that market. Corn looks like it's peaked unless you get a drought. So in my space, and I see deteriorating demand for diesel, unleaded gas, container boards, things like, inverted curve, leading indicator, stuff that doesn't matter until stock market goes down. All that looks bad. And I'll just tilt over the one thing I just published today that I've been mentioning. I've been publishing it every other month and just pointing out what I'm seeing and the facts of the deteriorating trend of Bitcoin versus gold. I'm still worried about gold, that metric versus beta. And here's one thing I'll end with is since the end of 2000, every single time the S&P 500 is about 20% above its 100-week moving average, everything that's extended and risky and high beta typically doesn't go up much more. Bitcoin's a good example of that. And we're at the point now that you're just at levels where you're supposed to be very careful about beta just backing up, and what that means for every other risk asset. For my space, it definitely means bullish for gold, bearish for copper, and potentially bearish for Bitcoin.
What about frozen concentrated orange juice?
There you go. It doesn't matter. It doesn't matter in the macro, but it's a good question that they've been squeezing some commodities like cocoa got squeezed this year, but we were on top of that. Luckily, my colleague wrote about it. I just did the technical outlook, just point out technically it's supposed to break out. But what happens after this is the lessons of Adam Smith and all lessons, it's the high price cure. Just starting to kick in. People reduce demand, supply comes on, it takes a little while. Bitcoin and gold are the ones that don't really have that high price cure, but they do. Bitcoin is still 3 times the volatility of gold.
So all I have to say is buy low, sell high, fear. That's the other guy's problem. Look, everything you said is why the Fed is going to have to inject liquidity, and probably actually did over the weekend, although we won't know that for a while. I look at yields, down, yield down today after the auctions of last week, which I was desperately waiting for James to comment on, because to me that makes literally no sense, except, oh, wait a minute. I've been saying for 2 years that the bond market's a manipulated market. Great. So now we know why. I'd like James, really want you to comment about that. But I absolutely can't stomach hearing you talk about Bitcoin has to go down with the S&P and gold can go up because of the beta. I think of all the things that you've said, when you look back on that statement in 5 years, you're going to say, geez, what the hell was I smoking? Because it just doesn't make any sense. The fact is Bitcoin is high beta because Bitcoin is high beta to liquidity. It is not high beta to stock markets. The two, it is the difference in statistics class. They teach you the difference between correlation and causation. Correlation, they move together. Causation, they're linked. Bitcoin is no linkage whatsoever to actual functioning companies which have to generate cash flow. Bitcoin does have somewhat of a linkage to gold because it's going to replace gold's monetary status. It's not going to take its place overnight any more than gold took silver's monetary status overnight. But silver, because it's so hard to carry around, and trust me, try to carry around a monster box of 500 silver coins, which is worth basically what, a little teeny roll of gold. It's just not very portable. The fact that Bitcoin's more portable than all of them. And, if I sit at a poker table with and I pointed at OKX, or I have my Bitcoin ring, or I was wearing my CoinRoute shirt one day, trust me, every single person has an opinion on it. It's no longer the same thing. I don't get what is that anymore. That just doesn't happen. And so the fact is I think that Bitcoin is in a range. It's still in a range, guys. Yes, it's now pushing toward the top of the range, so I'm not getting all that excited. But it feels to me like the breakout will be to the upside at some point. It might be in September, it might be in October, it might be next week. I don't know. Could even be this week. Who the hell knows? But every single time I hear you say Bitcoin is beta to the S&P, it just burns me, because Bitcoin has immense beta to liquidity. And what you didn't say, which is my favorite thing that you say, and you're right about, is that we're still shaking off the effects of the greatest liquidity surge in human recorded history. But the problem is that the Fed has no choice but to pump liquidity in to maintain the yen, to manipulate the bond market, etc. But I really want to hear James talk about the auctions, because the fact that we're not sitting here at 5% yields or moving toward that with those auctions, to me, is strange.
James, you queued you up. You're muted.
I am. Got to unmute myself. So a few things. First, Dave, I have, if you guys did not know, I was completely off grid last week. I had maybe an hour or two of internet last week. So I have not seen everything. I still haven't gotten through it all. I got back late last night, but, and for anybody who likes to do it, there's plenty of public land in the West that you can just go and park somewhere and get away from Twitter for a week.
How dare you?
So, but I promise to share thoughts on the auction later this morning. So, but what I did see, and what I have been seeing, and Scott, you saw what I wrote about, is there's softness, that we're seeing in manufacturing and in sentiment. And, what I wrote about here was the Texas and Dallas Fed survey. So the Fed, the various Feds do these surveys, and there's surveys, not just in Texas, but they have some in Kansas City and Chicago on the manufacturing side. And when they all are showing the same thing, it's worrisome. But what Texas is showing is there's a downturn in sentiment, and especially in the manufacturing and in the services and retail areas. And so what's important about this, and I just shared something, Scott, if you can see the chart I shared. So these surveys have two things. They have the actual data, and then they have, you know, how people are feeling, how the business managers are feeling, how the entrepreneurs are feeling, how the owners are feeling. And that's turned down pretty sharply. And you can see it especially in the comment section. So if you go back to that, Scott, you can see in the comment section, if you go back to the newsletter at the bottom there, you hear.
Oh, I've been signed in for some reason.
You have a subscription. You're not.
Yeah,
really,
I just got to sign it in. Give me a
But
minute.
anyway, so but the point is that, and I can bring it. But the point is that you hear these managers saying things like, you know, I'll read a couple of the comments to you, and this is what's significant. Things seem to be slowing down in the printing and related activities. Fabricated metal production, things to be slowing down. Machine manufacturing, it isn't much fun to be in business right now. Computer and electronic product manufacturing, customer volumes are decreasing. Transportation equipment, things are in a mess. Trucking is definitely in a recession. Inflation doesn't seem to moderate as much as we expected. Interest rates and inflation continue to dominate company decisions. Prices for goods, supplies, services remain elevated, restraining consumer purchases and construction projects. We're on the brink of having to make major staffing cuts. We're fairly certain that we'll be closing doors and releasing as many as 60 employees in the next few months. Higher prices are frustrating our guests. Businesses just continues to be very volatile. There are storms on the horizon. Inflation is getting pretty scary. And perhaps my favorite is we can't make enough interest on our deposits to cover inflation. So what's the theme here? The theme here is that the managers are really feeling the inflation from the bottom up. They're seeing the customers being negatively affected by it, and it's now beginning to really negatively affect their business. Why? Because they were able to pass through some of that inflation at the beginning. Now they've hit that limit. You know, customers are like, well, I'm just not going to buy that product, or I can't afford it now. And so that coupled with, so you've got manufacturers have higher input costs, higher raw material costs, which means higher production costs, at the same time that their employees are demanding higher wages, because they're like, I can't live. I can't even buy food. I need a higher wage, or I'm going to have to go do something else. I'll go drive Uber or something. I can't do this. And so they're having to raise wages at the same time that they're feeling that compression of margin. So that's real. That's happening out there. And so, and Texas is the second largest economy in the nation. It's not something to be ignored. When does it really hit? And Mike's good point of, when does the unemployment really tick up? And we've got a few reports this week. We've got the JOLTS report. You've got the unemployment report later this week. And so that's what we're watching for. We're watching for unemployment to tick up, not in just one area, but across the board. But why isn't it? Why are we not seeing recessionary signals in the US? And it's because we've talked about this before. It's fiscal dominance. We're running $2 trillion deficits and spending money in pockets of the economy, and it's making GDP look better than it really is. And so that's the problem. You know, it's not really gaslighting as much as it's manipulation. And so that's what we're feeling right now. You've got consumers absolutely feeling it. Businesses are absolutely feeling it. You can see it out there. It's not great everywhere. And if you believe that inflation is really 3%, as Dave says, he used to be able to look out at the Brooklyn Bridge. Or was it the Manhattan Bridge? I can't remember.
No, we actually could see. Used to be able to see the Brooklyn Bridge.
Okay, so he could sell you the Brooklyn Bridge if you really believe that inflation. You all feel it. Everybody feels it. You go to the grocery store. You cannot tell me that prices are up 3% from last year. Come on. They're not. They're not up 6% from 2 years ago. They're up 20, 30, 40, 50% on items. It's just, it's nonsensical. So
it's okay.
Yeah.
It's okay. It's okay. Biden's going to release a million barrels of oil to bring the price of, and going to release some of the strategic gasoline reserves, in order to try to win the election. Everything will be fine. No problem.
Yeah. And I want to hear actually Mike's take on oil, because it's interesting. And I read a headline this morning. I did not get to the story, but it was about OPEC Plus concedes $100 oil is not going to happen. So
oil's going down.
Yeah.
You want
And
someone
that
to
would
blame
be because
oil's
of the
going down.
economy, you know.
But it's also because of normal cycles. And one thing I just need to follow up a little bit is I'm mentioning that Dave, I think, seems to be missing what I'm pointing out. I'm mentioning simple pattern recognition things that are not good right now for Bitcoin. I'm pointing out facts.
Oh no, you're pointing out a correlation.
Let me finish. No, you're giving opinions. I'm giving facts. Now, here's a fact that Bitcoin is up today, and I think part of the main reason is because we had that significant reversal last and at the end of the day in beta. The point is, Bitcoin has been it was born of the major, of the financial crisis. It's followed beta the whole way up. It's led beta. The problem I'm pointing out now is when beta goes down, which will be soon. I think I've been wrong. I've been early. Bitcoin is going to probably lead the way, and it's going to suffer on a volatility weighted basis, the way markets usually do in value at risk models. Now, all the Bitcoiners tell me I'm going to be wrong. I'm like, prove it. Let me show the market. Let the market prove it first. Let the market have at least a 10% correction and see how Bitcoin reacts. And I'm pointing out, I got to finish on this. I got to rant here. I'm pointing out it is showing divergent weakness versus gold, versus a lot of things, and had a great reason for new highs. And people who didn't sell into that new high are just trying to talk it up. Big picture, yes, it's going to go higher. I believe with that. But right now, we have to get through the beta correction. So here's a fact in commodities. Typically, they go to the cost of production. Natural gas is the one that did it. It got down to the same price as it first traded in 1990. It's bounced. It's probably bottom. Crude oil's going that way. So the market right now in crude oil is completely dependent on OPEC cuts and fiscal monetary stimulus in China to go up. You see how the world's changed? China is going down. Look at bond yields in China. 10-year yield in China right now is 2.3%. That's the lowest in our database in 20 years, and it's 200 basis points below the US. That's a deflationary recession kicking in the world's largest demand source for crude oil. Then I look at copper. It looks like we put in a pretty good peak recently. You look at managed money net positions. Same in corn. The whole cycle of commodities is normal because we had the high price cure. Now, that's the difference with Bitcoin. The key thing I want to point out is I'm big picture. We have definable diminishing supply, and as Dave always says, the option. I get that. The point is, we got to get through that test. And then I'll just end with this: the key thing that made me a lot of money in 2008 is worse now than it was then. That's the extremely low volatility in the VIX. 52-week moving average minus the T-bill is the lowest since 2007. Volatility always means reverse higher. The big difference back then is the stock market was 1.3% times GDP. Now it's 2 times GDP, and China was in an acceleration. China's declining. That's the world that's changed.
Well, on a 1-year time horizon, I have to say this. On a 1-year time horizon, Bitcoin has tripled 300%. Gold is up, what, 25%, 30%? The problem is your divergent weakness is looking at periods of time that are not fair. Bitcoin moves in jumps. In the history of Bitcoin, its volatility, its beta, everything comes in small time horizons. There was a stat, and I haven't seen it refreshed, Scott. You might be able to find it, but there are 15 days that if you held Bitcoin, those are the 15 days that make up the entire move. But Bitcoin is up 300% on a 1-year basis. Gold is up 30 to 35% on a 1-year basis.
So I got to ask you, are you fearful of autocorrelation?
Freaking crazy because it's
quickly,
just a time period.
Dave, I want to point one extra thing out, and it's just interesting. Off the highs, I just kind of took a date and price range. Bitcoin's 5.72% off its all-time high. Gold is 4.74% off its all-time high. So I mean,
but my point here is not to ridicule it.
So I'm not picking a point in time. I'm going back since Bitcoin was really relevant when futures started. It's not a point in time. I'm just pointing out, if you look at relative to the S&P 500, when it gets this stretch, you don't want to be in that Bitcoin trade.
I understand what you're looking at, but statistically, none of this is remotely significant. Here's why. Okay. But let's explain the why here, because I think this is important for the audience. Bitcoin got way the hell ahead of itself in 2021, got to euphoria that is insane. The same price in 2021 today would be somewhere north of 300,000. Just think about that in terms of relative
to what?
Relative to inflation adjusted network strength.
Okay.
So if you look at the Bitcoin network and you look at the number of holders, you look at the number of addresses, you look at the hash power in the network, if you use that to kind of justify the Bitcoin price, it is literally 2021. If you inflation adjust the network strength, it would be over 300,000 today. We are nowhere near that. So we had this huge euphoric bubble in Bitcoin. And then we had 2022, which was a complete catastrophic. Oh my God, I have to sell it because of everything.
You're missing one key thing. We had a bubble and everything. And Bitcoin's the
Yeah,
fastest
but
horse in the race.
Bitcoin
It
reacted
was part
faster
of course, and
because
it's
of
going to so it doesn't react faster the other way.
but off the bubble. It came off the bubble faster because we had multiple things. We had the Widowmaker trade. We had the GBTC trade implode, and billions of dollars were vaporized in Three Arrows Capital, which killed Voyager. Sorry, Scott. Which killed BlockFi. We then had FTX going kerflooey, and all of that created massive forced selling, where people who didn't want to sell Bitcoin had no choice but to sell Bitcoin. All of that caused it is a seminal event. But if you ignore that seminal event and only look at charts, that's why I don't like charts. Charts sometimes are useful, like really useful, like, Texas traders. I forgot what Chris's name, what Chris's last name.
Texas West Capital.
Yeah, that Scott has on his show is freaking amazing. I think he's great at picking what's going on. But if you could try to do a long-term chart view and ignore the fact that we had a bubble which corrected, but in an asset that it was not the asset itself that caused the bubble, it was all the crap that was going on around it. You're missing the forest for the trees. And I think your analysis misses the forest for the trees on Bitcoin. I think your analysis on oil is spot on. I think you're absolutely right about the S&P, and the only thing that could keep that going is the fiscal stimulus and a wave of liquidity. But I think to ignore and say that Bitcoin is showing divergent weakness, it's just a different time frame. Bitcoin's in a range. And in fact, Scott and I were predicting a range off the halving. Actually, what we didn't predict was it pushing to an all-time high before the halving, and that was just from the ETF. But but just from the ETF is not a stupid thing. What it meant was that 50% of the world's investable assets now can buy Bitcoin for the first time, and they are slowly getting access to it. That's why when every single chartist was saying, and they all were, I mean, come on, well, not Chris, but a lot of them, so many people said, last week or 2 weeks ago or 3 weeks ago or 4 weeks ago, oh my God, we're going to go back down into the 50s. We're going to go back down into the 40s. And here we are back towards the top of the range again, which is what I've been saying is going to happen. But I still think we're in a range. I think you have to understand it. So my point is timeframes matter. And Bitcoin's beta, you're right, Bitcoin has the highest beta to liquidity. Watch what the Fed is doing. Watch what actual liquidity. Now, I saw a stat which could mean trouble, but someone put something on Twitter, and I was curious, and this is for you, James, and you, Scott. Someone put something on Twitter that money supply, and I don't know which measure, collapsed really fast. And the last 4 times that happened, it may have been M1. I don't know what they were looking at. Signaled recession. Have you seen anything about that, or is it just
M2 is up year over year? But I do know what you're talking about. I think it was M1 specific to the United States.
I'll have to look at that. Look, I think we have to take it all in context, right? So I actually agree with both of you and disagree with both of you on a couple of points. But look, Mike, I agree 100% that Bitcoin has been the tip of the risk on spear. I mean, it just has been. That's just reality. However, we do have to look back, and you have to look at what's the reason that the market sells off. Is it because of treasury dysfunction? Is it because of banks collapsing, of regional banks collapsing? Because if you look back and March and April of 2023, Bitcoin was up 25-30% in the face of the collapse of Silicon Valley Bank. And so that is meaningful. That is an absolutely meaningful measure. And
you could even say as a result of, by the way.
As a result of, absolutely. Right. And so and it was bumping around the bottom. It was bumping around its recent lows before that. So, but what's significant about that is that whatever happens to the market here and why we sell off is going to matter with what happens with Bitcoin. And the difference here is that we have these ETFs. Okay, we just saw that University of Wisconsin added the Bitcoin ETFs to their portfolio. It's a tiny little allocation, but like we've been saying, you're gonna toe in, you're gonna leg in, they're going to now be forced to do their homework and research on it. Why is that significant? Because more and more people will start understanding what Bitcoin really is and how it's different from every other digital asset and digital currency. And so that's important because you'll have more people understanding why they want to own this when you have a regional bank collapse, when you have a spiral downturn in treasuries, that the Fed has to step in and start monetizing. Bitcoin will rip on that, in my opinion, if that's the reason for the downturn in the market. So
Exactly.
it's
an opinion. I want to
yeah.
see it. I want to see the market. I'm as a guy who's focused on pattern recognition. I want to see the market show me that, and it's not showing me that yet. It's still showing me that it'll go down
It
when
showed it
beta goes down.
once. It showed it once, and it's not showing it consistently. I agree. And so,
We haven't had another bank collapse, at least.
Yeah,
well, no, we haven't. We just haven't. Just give me a 10% correction in beta and see how Bitcoin responds. It hasn't done that. It
but I
keeps,
think
they're all going up together. I get that. They're supposed to. The fastest horse race should go up the most. But that's the problem. Now we're things are so expensive and risk assets are so risky. And it's the key thing you said earlier. Everybody's starting to worry about inflation, and people tell me, like Dave says, "Oh, the Fed's going to add a liquidity." Again, that's an opinion based on what's missing. The market has to go down first. It's called autocorrelation. You're missing why did Bitcoin crash? And we have all these things that FTX and thing goes under because the tide went out. We saw who wasn't wearing clothes, and part of it is because it went too high. So to me, it's just the cycles I'm worried about.
And if we see the market crash, and we know that we can't have severe asset deflation, or that does affect the treasury negatively. We know that, and even though Powell will just say, "I don't care about the stock market," he does in a sense if it goes down too fast, too hard. And we saw it in March of 2020, and we'll see it again if that happens, because the treasury market will become dysfunctional, and
did he say that? Because that's a silly statement. Just read the Ben Bernanke's Courage Act that he didn't care about the stock market. It's the most important thing in the history of financial assets right now is the U.S. stock market. It's the versus GDP, it's the most expensive since the 1930s. Anybody says they don't care about it, good luck with your investing. It's all that matters when it starts moving.
Agreed. And so if that draws down significantly, we will see liquidity. I think that you will see liquidity because they don't really have a choice, and that is an opinion, but it's a strong opinion off the facts of their recent behavior in the last two downturns. And so that's what we expect, and I expect them to print more than they did last time by a factor. Why?
So what's going to take them to print? What's going to take them to print? That's my point. The iteration
to
get them to print is the stock market has to go down first, which means beta has a drag pull on all risk assets. Bitcoin's a very risky asset. We're assuming it's going to outperform like treasury bonds or gold. I'm not making that assumption. I'm just pointing out here's three times vol beta. If beta goes down, that's a risk. And for the Fed to print, beta's got to go down first.
Okay,
but isn't the Fed? Shouldn't we talk about then monetary versus fiscal printing, because we are printing? It's just not the Fed that everybody's watching that's doing it.
Exactly, which is what is keeping the charade going. However, Mike, what I'm saying, okay, and so let's bring this home. Let's bring this over the goal line. What I'm saying is that if you are in Bitcoin for a trade, if that's what you're doing and you're just trading it, I agree with Mike. Just be ready that this thing could severely draw down. But I think that it's going to be very difficult to time that as a trade. So if you're a long-term holder of Bitcoin, like I am, like I assume Dave is, and all you guys are, if you're a long-term holder and you believe that this is going to be ultimately the ultimate risk-off asset in the future, it's not yet, I agree. But if it does, if you believe that, then you ought to just be having a little bit of powder on the side, on your sidelines to add to it when we do, if and when we do see a severe drawdown that has nothing to do with bank collapse and people trying to get their money into something that can't be seized, that can't be just taken from them because they're in a regional bank that doesn't have the proper insurance coverage. Okay, so that's what I'm saying, is that if you're long-term bullish on Bitcoin, and you believe and you agree that there's a high probability, which I do agree with you, Mike, that there's a high probability that we do have a sharp drawdown, but I think it's gonna be difficult to time. So just add to it as when it does come in, and sit on your long-term core Bitcoin holding for as long as
Totally agree. I have a question, Dave, before you jump in.
Okay.
And somebody asked it in the comments. Define severe drawdown. James,
20,
Mike,
20 plus percent, 20 plus
20
percent.
plus percent. No, just even a range. Like I'm not saying like a specific number, but I believe, kind of as Dave alluded to before, that if we hadn't have had the ETFs, we would be doing the exact same thing we're doing now in the 40s.
Oh, well, let me back up. The severe drawdown would be 20 plus percent in the S&P, but that could be 40, 50% in Bitcoin.
Okay,
you
so
don't know. Like
you're talking about severe drawdown into the 30s.
Do I think that Bitcoin's
40s,
going to? Yeah. Do I think Bitcoin's going to go under 40,000 again? I don't. But it could do it momentarily. You see the exchanges just crash when these things happen. It's still in its infancy. In reality, it's not yet or at least the companies who are managing the trading platforms.
If you get to a state where we have a significant long position, which we don't, but if you get to a significant long position, then I don't have derivative information up here, so I'll go look up funding rates in a second.
I can look it up.
Yeah, I'm looking at funding rates. Yeah, the funding rates are still they are infinitesimally slightly higher than normal. But if you and the market has ripped $2,000, so that's not there's nothing there. But if you get to that, if you get a liquidation cascade at the same time, that could break it. The issue really is that there's latent demand out there. There are clearly people who have buy orders and are bidding, propping up the market. So every time people expect it to drop X, it drops 1/3 X. That's happened basically for the last 4 months, just because it is hard to invest in a market this small. The amount of money that is interested in investing in this market is much larger than this market. There is not that much supply, which is why I think that delinking is likely. But it is absolutely true that in a crash, all beta goes to 1. Certainly, all correlation goes to 1. Beta,
Not what are you on?
The one thing I can tell you, Mike, and this is something that's important and people should know, is I ran statistical arbitrage trading strategies for over a decade. And the single thing that kills people more than anything else is assuming betas are stable. Betas are notoriously unstable.
Ask long-term capital management.
That's right.
That's what I have to.
Go ahead, Mike, please.
No, that's what's really tweaking me lately. I remember in 2007, a friend of mine at GE thought he owned GE stock, thought it was like T-bills. I'm hearing that lately. People are using SPYs as T-bills, but it's the psychology. The psychology is so extreme now. People think SPY is a T-bill, is a store capital. That's when it happens. And a typical drawdown is 50%. So that's my point. Is that's what I'm hope I'm wrong. That's my point. Is I don't say these things lightly. I'm big picture. Long-term, very bullish Bitcoin, but when you see 2 times GDP in the market capitalization stock market and you're overweight long stock market, I just say good luck.
I think
the history is against you.
I think it's really important to make this distinction for the audience.
Yeah.
I think you're 100% right as it comes to beta of an asset class to what it is beta to. So the S&P has a ridiculous beta to the money supply and what's going on in investable assets. So does Bitcoin, right? They both are beta to liquidity, but the beta of GE to IBM to Apple to McDonald's, those betas of asset to asset betas are notoriously unstable. I am telling you, Bitcoin is a single asset, and it's as a single asset beta to any of those stocks is not nearly as stable as you take your 3x beta. It depends on your time horizon.
I'm just talking volatility. I'm just looking at annualized volatility. It's just a fact. It's usually right now. It's actually ticking up. The high was around 10x around 2017.
Mike, you're sitting here. James and I are telling you that our core belief. There are 2 data points here. My belief is that Bitcoin's price to be as exuberant as it was in 21 will be well over $300,000. Bitcoin's price, in my opinion, will hit 240,000 in this cycle. In order for that to happen, it has to 4x or close to 4x. Obviously, we want a low volatility asset. That will be impossible. At the same time, the notion that correlation is causation, which is beta, is different. So do I think that Bitcoin could get to 240,000 if the S&P drops to 2,500? No. Do I think Bitcoin could get to 240,000 if the S&P is still around 5,000? Yes. That's the difference. Okay.
Okay, so
I can't phrase it any differently than that.
well, we just have this issue that what drove all assets, number one, the high volatility Bitcoin up there in that pair was the biggest liquidity pump in history. And then, of course, COVID and the Russians invade, I'd say the unlimited friendship, which really bid gold. And that, my point is, over for now. And now we still have sticky inflation, expensive stock market, expensive, massive speculation still in cryptos, and a Fed that says they're going to ease, but they can't. And to ease in this environment is just silly. So that dangling carrot that's really lifted Bitcoin for its whole life is potentially going away. I just want to see proof that it's going to outperform this. So we can beat that one to get forever. It's just my what I see is and I see it like. It's like people talk to me, they're bullish copper. I'm like, okay, well, what do you think of what's happening in bond yields in China and the U.S. and beta here? Those both, bond yields have to go up in China, and U.S. stock market has to go up. Otherwise, copper is just put at a pretty good peak. That's what I'm worried about. That Bitcoin did similar, and it had a good reason to make that high.
Copper and the S&P have done the opposite of what you've been saying this year. But what you have been saying, which you've been totally right about, is that copper is an incredibly good proxy for what's going on at the S&P. And you've been absolutely right about that, and no arguments there. I just think that if you take the idea that 15 days is where all of Bitcoin's price appreciation is, that having to wait for the proof means it will be proven to you when Bitcoin, does a moonshot, you will be out of the market, and then when it's liable to correct again, you'll jump in. And from a trader's perspective,
it'll do a moonshot with the stock market staying stable or going down. Okay, stable. So that again, that's a view. I'm just pointing out the facts lately are the trends are, yes, potential. I'll be wrong. You got those 15 days, but that's my just point out pattern recognition. That's what it is.
And all I'll say is pattern recognition. I literally tried. I spent years in different, certainly at 2 Sigma, when we were doing retail things, trying to do pattern recognition on charts to make money. You can't. They don't work. They work when you see them. They sometimes are explanatory. You have to combine them with other things. There are many, many things that you've said, and a lot of them are really important. But I think that pattern just is statistically insignificant.
Yeah,
when it comes to Bitcoin,
really quick, Dave, as we bring up the chart here, you and I have talked about that we're kind of trading now in the top half of this range on Bitcoin, right? We can set the range basically from 74 down to that low there. If we're cherry picking dates, which Dave loves to talk about, May 1st, we were at 56, right? And we closed the end of May at 67. It was actually a tremendous month if you look at it, beginning of month to close of month, and now we're pushing at 70. So yes, we're not at the high of 74,000, but if we just look at May, it was an exceptional month, and June tends to perform well. We're pushing towards 70,000. If you guys are wondering why I was laughing in the background while you were talking, I was watching GameStop trade here. This is the daily, but it gapped from $23 to $40, immediately circuit breakered from what I could tell at $38 and sat there for a couple minutes. And now
$1 billion lost in
$32
hedge funds from what I heard.
Yeah, and for anyone who wasn't paying attention, this is because Gil, Roaring Kitty, we all know he came back recently and started memeing X to death, but he announced that he had roughly, I think, $160 million here. It says position in calls, I believe, in options on GameStop. He can totally take a position and publicly share it, by the way. There's no manipulation there. And that is what caused this to happen. If this goes back to the $70 region, he'll make $1 billion on this trade, in case you guys are wondering. So this is what's driving the stock market right now, right? I mean, the real insanity is that you want to talk, SPX that's the monthly, that's useless.
Here's my favorite. Can we pivot to my favorite
SPX
topic?
Is up, gapped up, right? Can
we pivot to my favorite topic? The one that will cause me to rant.
I was gonna save that. I was gonna literally go kill a steer in the back and gut it, and then throw the red meat into the building and run away before you ate my hand. Yeah, I'm assuming this is what you want to talk about.
Yeah. So here we have the cadaver in chief, which is now my favorite line. That is the Ryan Selkis line. I cannot take whatever. After his party, his Senate Majority Leader, bipartisan Congress basically says that the SEC Staff Accounting Bulletin 121 is terrible policy. He vetoes that. Now, let's unpack that for people so they understand just how dumb this is. politically dumb, economically dumb, and effectively shows that we have kindergartners running our economy in this administration. It is something that has gotten me incredibly fired up.
Only if this is
Elizabeth
Benjamin
Warren
Button.
Elizabeth Warren is behind this. Like
Elizabeth Warren, who,
That was my first tweet,
AKA
was
the
that this
devil's
has her
handmaiden.
fingerprints. Yeah, her
Right.
fingerprints.
It
all
has
over
her
it.
fingerprints all over it. So here's the deal. So SAB, for just to be really clear, is a staff accounting bulletin. It did not go through a public public comment period. It did not go through industry consultation. It was not a rulemaking, yet it has the impact of a rulemaking, because with that guidance, no bank could possibly custody Bitcoin or Ether or any other crypto on, for customers
without exposure. Exactly.
Without it being exposed to the point where no risk committee would allow them to do it. So effectively, it has the force of law, despite being a terribly bad process, arguably an unconstitutional process. Probably, if the banks wanted to, they could probably sue in the courts and add them to the growing chapter of people who are crushing Gensler and Warren in the courts. But Congress sees this and says, this is no. So now they could go to the courts, I guess, because of West Virginia versus EPA, which is the major questions doctrine, which basically says this is wrong and it probably wouldn't hold up. But banks don't do that. Only crypto people do that. So we have it. And we have the president basically siding against the courts and against Congress to effectively try to extend Operation Choke Point 2.0 to cripple the crypto industry because, wait for it, people, it's too risky. Meanwhile, his stock market is being led by Gamestop, which has no free cash flow, where the insiders have been dumping stock. And this is what's leading the market. Hey, I think Keith Gill is cool. I actually loved the fact that in his initial analysis years ago that GameStop could use this to create an online community, and hey, we should build on it. And that's fine. But when we have a market that is like this, and he even thinks that he could say that Bitcoin is more risky and people shouldn't be exercising. And I'm sorry, Elizabeth Warren, but frankly, you would have been failed out of 5th grade math if you said that by looking at it. So I'm sorry, but this is unbelievable. Now, what does this mean, though, to the market? Well, what does it mean? By the way, we just crested 70,000 for those.
Yeah,
who care.
70,000, 130.
What
And
does
it could still be signed into law. Let's be clear. It could still be signed into law with Congress.
It could be, but the fact of the matter is.
But the point is that it's just showing the ignorance of this administration.
James, no, not ignorance, malevolence.
Evil.
Malevolence, fine.
Malevolence of this administration.
Well, ignorance of the administration.
Has decided.
Dave, you've been on the Hill. You've been on the Hill. You've talked. You know that a lot of the senators and congressmen don't even make their own decisions. They're just informed by their staff. And if the staff is informed or being pushed by Elizabeth Warren, then it's out of that's out of ignorance to the malevolence that's behind it. That's the point, is that there's enough ignorance that they won't stand up to her.
But here's their reasoning. The reasoning is unbelievable. Brad Sherman said the quiet part out loud 2 weeks ago. And I know we talked about it. He said, and I quote, "We have a fiscal policy that would make Argentina blush. And so we can't afford any competition to the dollar. So we have to stop these crypto guys because they want their own currency." Now, this is ignorant on 2 levels. First, it's ignorant that he could hold back market forces. Anytime a government's ever tried to hold back a market, they've gotten crushed. Talk to the Brits. They know all about it. The reason Soros has enough money to destroy our DA processes all throughout the country is because he bet against the pound in the 90s. I was in London at the time, and I know exactly what happened.
Yeah.
And we could talk about that ad nauseum, but that's really dumb. But the second reason is Mike's point. He always makes this point, and he's always right, that crypto is actually helping dollar stay as a reserve currency because crypto dollars are so popular and so important. So it's actually blinding ignorance on the part of Warren and Sherman and all of these people who say these things. I mean, it is
But Dave, and this is, I agree 100%. And for context for people, Tether is a top 20 holder of U.S. Treasuries. That's the point. But the second thing is the malevolence comes in. Why are they doing this? What's the end game? The end game is the CBDC, and that's what everybody better wake up. They better wake the fuck up to now. Like you better wake up because you do
truth
not
to power, my man.
James just channeled his inner Lepard.
Seriously,
Larry.
You do not want them to have, single item oversight of your spending. You do not want that, and that's where we're headed. And that's what Warren wants, and that's why they're ultimately doing this.
And for people who want to understand why have I basically held my nose and effectively on Twitter come out and effectively supported Trump, although I might still vote for RFK if he has a chance, is I can't vote. There is no issue which bothers me more about Biden, who has clearly declared for CBDC. And whether it's DeSantis or Trump, they have both come out specifically against CBDC. Kennedy is against the CBDC. The notion of a controlled federal apparatchik bureaucratic economy, the Bolshevication of America would be complete under Elizabeth Warren. It is literally that bad. And I agree with you, James. And that's why. And yeah, look, the funniest news this morning, and it came out over the weekend, was literally Gary Gensler, of all people, because he was the CFO of Hillary's campaign, did exactly what Trump was convicted on, except in his case, it wasn't to pay hush money for an NDA, which, by the way, John Edwards was, when he was running for politics, famously did exactly the same thing that Trump did. By the way, what Gary Gensler did, it was for the Steele dossier, which was arguably completely wrong and certainly more evil. And so now we're going to have to see that. And that will probably get factored over the next few weeks into articles of impeachment. They may, who the hell knows what's going to go on behind the scenes. But, you see all this crap. And one of the reasons Bitcoin is probably rallying is people realize that Biden Biden's advisors, whoever the hell is running Jill, I don't know. Maybe Dr. Jill is running the economy. I don't know. But whoever's running this show is going to realize they have a lot of problems in what's going on. Am I happy? It's like about this. I mean, what Trump did, cheating on a pregnant wife with a porn star. Is that something that I can count as? I've been married 35 years, have been faithful my entire life. I find that reprehensible what he did. I am not a fan. But I don't care if it's the only way to prevent a government that could put a CBDC into place over the next 4 years, I'm voting against that government. There's just no two ways about it. So for people who want to understand, it's not about anything else. I'm not Ryan. I'm not cheerleading Trump. But the absolute reality is the policies, it's a big deal. And the polls and the betting markets are saying that this is actually helping him. He raised an enormous amount of
$200 million.
People, and so, money does matter. And unfortunately, I think that's why Bitcoin is actually rallying. It's because of that. And is that reasonable? No, the whole thing is insane. We are the laughing stock of the world. I've talked to multiple people from other countries, and they can't believe the kind of shit that we're going through in this country. Okay, I'm gonna take a breath now.
Mike, any thoughts?
I got to chime in. I always, for the most enduring bull market in cryptos, is the volume and market capitalization increasing in Tether. And I've been pointing it out. I like to publish on it because I know people read it. And then if our government messes that up, shame on them. They will not mess it up. But you're seeing part of the discourse. We have to have the antagonists. It's just how our system works. But it tilts me back to how we started this conversation with Gamestop. There's a speculative frenzy going on in U.S. stock market. It's the most expensive in our lifetimes versus GDP. Volatility is very low, and inflation is above the Fed target. For the Fed to ease in the environment is the reverse of all the lessons we've learned of history, and that is humans are all about error correction. We will not make that correction of easing too soon, creating the inflation that's crushing everybody in the world, most notably the lower classes in this country. They're not going to make that mistake. And here's my bottom line is that's not going to happen until the stock market goes down with the Fed ease, which is part of the reason I'm worried about all risk assets, and Bitcoin's just a risk asset.
And I will make the point that in the 1930s, if the Fed had the tool and I love the initial one on YouTube of the quantitative easing, and you can look it up. It's these two, people talking about the Ben Bernanke and whatnot. It's hysterical. But if the Fed had quantitative easing and we had a plunge protection committee, which we do, which can buy S&P futures, which can put out liquidity. If we had that in the 30s, it would have looked very different. If we had that in the 70s, it would have looked very different. Who the hell knows what would have happened?
We also we have a much higher concentration of wealth now. So it's not a broad, it's not a broad wealth creating situation with the S&P, because you're seeing consumer credit delinquencies rising rapidly. What is happening? Like, it's just not this. It's not widespread across
it's
all.
Why we need crypto.
It's
why we need what we do, James. As I've said before, if you set out to create wealth inequality, if your goal was wealth inequality, what would you do? You would flood the system with liquidity. You would keep rates lower so that you would prioritize capital over labor. You would slam on as much regulation as you possibly can, which always favor large companies over small. And small companies are the engine of growth and economic mobility. You would do all those things. At the same time, you would continue to expand budget deficits to the point where now at 130% of GDP. Oh, wait a minute. Both parties, this isn't political. Both parties over the last 30 years, that's been the policy. They have done exactly what you would do if you wanted to create wealth inequality. Well, guess what? You got it. And it's going to get worse. And there's only one real good answer to that. And that's to return to a sound money-based economy. And we are a long way from doing that.
That's not happening with either party or either candidate, for the record.
Absolutely
not even
right.
close. These are the two largest spending presidents in history, and they can go they can share their theoretical opinions of what they'll do, but we both know they're just going to spend their way endlessly, print money, and continue the same path. It's the same thing. Like, there's a lot of nuance. Don't get me wrong, but give me a break. Like,
if you're looking at GameStop and believing that, well, there's still a lot of money sitting in people's accounts that are in the lower demographic, even if it really is non-professional investors who are buying GameStop up at this level, to me, it looks more like a Hail Mary pass. These people are trying to buy a lottery ticket to get out. And so even if the lottery ticket is worth less, they're going to have they have something that they can hold on to, and they're using credit cards to buy it, which is the craziest thing.
That's the greatest. That is such a great analogy. What do economists call the lottery? They call the lottery the most regressive tax on the poor.
Yeah. Well, it's human
nature.
Think
about that in combination with what you just said.
It's human nature to go to the casino when things are bad, throw your money down.
I'm in Vegas, baby.
Well,
I see it.
But when things are bad, you just hope it does well. To me, this is just a classic human nature, things I've heard my whole career, that and that's why I have to, I hope Bitcoin, I know in the long term it's going to come out ahead. It's just the shorter term that we have to get through. No one who's really running money now, except us, who knows what it's like to have a 50% drawdown in beta. It's what always has happened in history, especially when you get to indicators like this. And it just, hopefully it won't happen soon, but it's just a matter of time. And that's part of the reason and it's happening in the rest of the world. So here's one thing I like to end with. If you look at, I always go to bond yields. Government bond yields are one of the best indicators. Obviously we have the inverted curve, stuff that doesn't matter in the US. It will matter once the stock market tells us to matter. We have leading indicators that are negative, but if you look at the top 5 countries in the world, China, Japan, UK, India, Germany, the average of their bond yields are 100 basis points less than US 10-year Treasury. 100 basis points. That's the most in our database since 2006. In 2008, when we hit into crisis, they were 100 basis points above. So the rest of the world is showing those deflationary tilts, and there's only one thing holding it up. It's US. And what's holding the US up? S&P 500.
Can I ask a question?
Fiscal spending is what's holding the U.S. up.
There you go. Yeah, and how long is that going? That's good for gold and Bitcoin. But
ask yourself a question: what happens to the dollar's reserve status if people don't get higher rates by having money, parking money in U.S. Treasury?
Where do they go? I'd love that. So that's why I'm bullish gold. So go to any other currency in the world. Maybe there's a 5 in terms of dollar being a 10. Where do you go? Where do you get the deep money? And by the way, you get 5.3% UST bills. So I get that the dollar reserve. I've heard it my entire career. Every time someone's told me yields are going up because there's more deficit, I get it. But every time they've been wrong, I just point out there's no other currency that's even close. Gold's potentially there already. We're seeing that with this major shift in central bank buying gold, and Bitcoin's the newcomer on the block.
All true, but all I'll say is this: if you look at a negative yield curve, the negative yield curve is an assumption that this situation will be kicked down the road 10 years or 30 years. That is what the negative yield curve is telling you, because otherwise, if you think that there's a chance of an inflationary spiral, then anyone who's willing to lock up their money for 10 years at that rate is literally a moron. And if people aren't morons, they believe that the governments will be able to keep this exact situation for another 10 to 30 years. That is what the market is saying. Whether they're right or wrong is a totally different story. The market is saying that this fiscal situation, this situation is going to exist for that long. That's what.
Or it gets better before it gets worse, and they could trade out of it. You know.
Yeah, okay, whatever. Yeah, you're right. But I'm not talking about what hedge funds are saying. I'm talking about if
you're a long-term holder of 10-year treasury, you think you're going to lose money on that real rate. That's just reality.
But that's the key thing. If you're a long-term holder, 10-year treasury, you're getting 100 basis points above every other major country in the world. That's my point. We're the least worst of everything else. It's those bond yields usually are good indicators. So I see the 10-year treasury right now is 4.45. I think it's going to 3.45 or 2.45. That's exactly where most of the rest of the world is right now.
And I think we're closer to the 70s where it stayed like that until it got too bad. I mean, this year is an election year. They're going to do everything they can to keep it like this.
Yeah.
Let's see what happens.
Yeah.
I don't know who wins.
Yeah, I'm RFK for now. Like I've said it openly, like as you said, Dave, like if he actually has a chance, I think a lot of people would jump on. We need to see the evidence of that. I spent 2.5 hours in a room with him with less than 10 people at Consensus. And I can just tell you, when you speak to the guy personally, all the crazy that you think you're hearing that even sounds crazy to me when I see it on the media, it's just not there. And I sat and I said to him, listen, we have the 2 largest spending presidents in history. I asked him the question of what I said to you. I said, we're adding $1 trillion to the debt every 100 days. This is the single largest problem facing America, and neither party will address it. They're both going to just plow through it as if it doesn't exist. He gave a very actually eloquent response as to how he would deal with that. But interestingly, one of them, and maybe it's because of the audience he was speaking to, but he said, we need to grow our way through it to some degree because there's no way to just cut enough to do that. But we need to grow our way through it. And he believes crypto is a huge part of adopting the technology, embracing it, bringing it to the United States. And he believes that AI, tech, crypto could help grow enough to start to offset a bit of that. He doesn't think we're ending the debt spiral.
The sole question I would ask
gets
for him,
it.
Did you ask him this question? Does he believe that the federal government, the 3-letter agencies, the amount of regulation we have is sustainable? Yes or no?
No, you know the answer to that. He wants to, his uncle said, take the CIA splintered into pieces and spread it to the wind. And that's certainly where he believes, hey, listen, like I said, it's pretty, here he is. Emmy and I, it was a great couple of days that we spent there with him. I would love to see, listen, even if you don't like the guy, you think he's nuts, I would just love to see a viable.
No, Scott, I
just want to see a viable third option. I don't want to have to be forced to vote for one of these.
I really hope he gets on the debate stage where they're going to have to do it Zoom, where Trump.
They won't even give the guy Secret Service.
Yeah, Scott. Scott, we stood with him for an hour talking to him in Miami, and Jeff Booth was there, and we were talking to him, and I agree. What you hear, the sound bites you hear, are completely taken out of context. Like he has a good vision and understanding of what's going on in especially in DC and the U.S. economy. And but what remains to be seen is whether the 2-party system will allow or will be able to defend off effectively a third choice. And when you have 2 presidential candidates that we have now, I think it opens the door. It finally opens the door.
I tweeted something. I said, listen, I'm going to support him just to give another option. Then we can decide.
It's not like Ross Perot. It's not like the Ross Perot situation. Like this is different. You have 2, extremely.
we have a convicted felon, someone who needs to be on drugs to be in public.
I mean, that's the part that the other countries are laughing at us about, right there.
I agree. I mean, look, I'm not, as I said, I have not made up my mind who I'm voting for. It is literally for exactly the reasons that you stated. But the simple fact is it is unsustained. We cannot survive this with this amount of regulation. With this, you just can't. The only way to get out of this is to grow out and to embrace different principles. And Yeah, you're not going to get it. I don't think you get it with either party. Maybe Vivek will push Trump towards doing that. I don't know.
No way. I don't think we can grow our way out of it, but it's nice to have someone at least address it as a viable problem and not pretend it doesn't exist when I do believe it's the largest problem facing our country. It's at 10:04, guys. Thank you for the extra 4 minutes.
Sorry.
This was amazing. James, congratulations on earning your spot back from Larry.
I heard he was phenomenal. I almost lost it, so.
He came in firing hot. I will say that.
You gotta love it. Larry Unplugged is the best.
Thanks for sending him. It was great, guys. We'll see you tomorrow, 9 a.m. Eastern Standard Time, of course, next week for Macro Monday. Thank you, gentlemen. See you all soon. Bye.
That's dope.